We are good, yeah.
Good afternoon. Thank you for coming and assisting our last webinar of this cycle of webinars. The first one was on Monday. We talked about how to obtain legal residence in Portugal and how to apply for the non-habitual resident status. On Wednesday, we had our guest, Kili Keppel, talking about buying a property in Portugal. Thank you very much. You can assist these two webinars on our YouTube channel, RSA Law Firm YouTube channel. And today we will have our final and third webinar with our guest, Claudia Schutz from Quinta Finance. Hello, Claudia. She will talk about mortgage in Portugal. She will provide all very important information for those who want to buy property in Portugal and request a loan for it. So Claudia has 15 years of private and investment banking experience with UBS Zurich, Jersey, and London, and 70 years of mortgage experience within the Portuguese banking sector. Claudia, you should start your presentation, please. Oh, at the end of the webinar, we will have a short time for questions or doubts if you want to ask directly to Claudia. Please, Claudia.
Thank you very much, Sarah, and thank you very much for the ASR team to organize this series of webinars, and also thank you for inviting us to contribute to the third part of this series, which will cover mortgages. I'm not sure if all of you have joined the previous two sessions, which you may have tuned in on Monday or Wednesday, which covered the residency and the NHR status, and also the buying property in Portugal. This presentation will, in some areas, refer to the points that were discussed in those previous two sessions. But if you've missed them, I'm more than happy to help you at the end to understand what I was talking about. And also the sessions were available on YouTube, so you can always rewatch them because they are kind of, all three of them are kind of interlinked. Okay. So I'm just going to put up my screen now to start the presentation. So during the, let me just see. So hopefully you'll see the presentation now. Yes. During the next 20 minutes or so, I will be just providing you with an overview of our company, our team with the main partners, the benefits of using Quinta Finance and the services that we can offer you as a client, and also the reasons for borrowing in Portugal, the mortgage options available, non-resident and resident mortgages, which is a frequent question that our clients have. I'll briefly touch up on the approval criteria, which are slightly different than some of our clients, our international client base, know from their home countries. And also I will talk you through the mortgage process. So our mortgage brokerage service was established in January 2004. And over the years, we have grown into the largest non-resident mortgage brokerage service in Portugal. We are registered by the Bank of Portugal as a credit intermediary. And during the past 17 years, we've built and solidified, oh, sorry, I forgot to press, over the past 17 years, we've built and solidified working relationships with major Portuguese banks. So we, as a brokerage, are based in the Algarve, but we can do mortgages all over Portugal. We've also done mortgages in Madeira and some of the islands of the Azores. Because we are a locally based company, we have regular meetings with the banks when we can follow up on our client files and also discuss the product and policy changes with each bank, which can sometimes happen. Obviously now we're going through a pandemic, so changes are always reviewed, policies are always reviewed by the different banks. We have also negotiated special conditions for all our client base, which will save time during the mortgage process because we have access immediately to those conditions that we have already pre-negotiated for our client base. So just to give you some background, Sarah has already touched up on it. So I'm one of the founding partners of Quinta Finance. I'm originally from Switzerland. I used to work at UBS in Zurich, Jersey and London. So my background is private, mainly private banking, some investment banking. 17 years ago, we started the business as the mortgage brokerage here in Portugal. I'm also FSC qualified in the UK to give financing advice to clients, and our certificates are available on our website. I'm fluent in German, being from Switzerland, and I do try my best in English. My business partner, Mario, also a founding member of the company, is originally from Jersey, the Channel Islands. He worked mainly in investment banking with UBS Jersey, Chase Manhattan and Deutsche Bank, and also has spent some years in private banking. So we have a lot of dealings with high net worth individuals, which are also one of the markets down here that are looking for second homes or private residences. 17 years ago, he joined Quinta Finance. He's also FSC qualified in the UK. His copies of the certificates are also available on the website. And despite his name, he is fluent in English. So that brings me to the benefits and the services that we can offer our clients. So we're both UK and Swiss qualified financials in those respective countries. And our company is registered with the Bank of Portugal here as a credit intermediary. We are registered to be allowed to provide the lender with documentation from our clients. And we're also allowed to, or registered, that we can advise our clients on different mortgage products. So it's also an advisory service. We can source through the relationships that we've built up over the many years, the different financing options from the clients, and also show you different solutions that are available tailored to your specific needs. We offer a proactive service, and coming from a banking background, especially me from Switzerland, we always try to offer a very professional service, and also very important because obviously we do deal with the financial information of our clients. We treat all data confidential. We have access to preferential conditions with the lenders that we work with, and this is due to the volumes of introduction of business. We also provide all clients with a comprehensive mortgage proposal document, and we provide that in English or German, whereas many banks would only offer that in Portuguese. We offer a comprehensive service, so it's from inception until completion of the final deed. So during the process, which the mortgage, the buying process usually takes between 4 to 6 weeks. So during this process, we deal not just with you as our client, but we also organize bank valuations in conjunction with the sales agent. We interact with your appointed lawyer to get certain documentation with regards to the property. and make sure that this exchange of documentation is done in a timely manner between the legal representative and the bank. So being in Portugal, there's always a lot of paperwork. So we do try and keep on top of this to bring a deal to completion between 4 to 6 weeks, as just mentioned. So the reasons for borrowing in Portugal, obviously all clients are very different. So there are always different reasons why a client would opt to look at mortgage options in Portugal. The first one, which I did not put on the slide, is obviously clients have saved the deposit and they would need a mortgage to realize their dream of owning a home, maybe a holiday home or a primary residence here in Portugal. But other reasons are also, so cross-border lending is currently not possible. What this means is that, for example, a UK bank or a German or a Swiss bank cannot lend against an asset in Portugal because the mortgage will need to be registered against the property. So a UK bank or a German bank will typically lend against a property or an asset that is also physically in that jurisdiction, i.e. the UK or Germany. Also, another reason which a lot of clients do drive to obtaining a mortgage is the continuing low interest rate environment. So since the financial crisis back in 2008-9, which I'm sure all of you remember very well, interest rates have always been very low. Even pre-pandemic, because of the economic situation. Sorry, can I just check, are you still hearing me or?
Yes,
yeah, okay,
sorry. Still here.
Okay, something flashed up that my internet was not stable, so I do apologize. Okay, so the interest rate environment has been low since the financial crisis, and also we've seen now, especially with the pandemic that started early last year, the European Central Bank and the central banks around the world are using quantitative easing, which is also another word for it is money printing, to flood the market with liquidity, which is keeping borrowing levels at very low levels. Okay. Another reason to borrow here in Portugal, some clients do like that there is a bank valuation done on the property. I will touch up on this later. It is just a bank valuation for mortgage purposes, so it is not a structural survey or a home buyers report that maybe some of you are based in the UK are available from there. Another reason may be that the mortgage here in Portugal at this moment will only appear on the credit report with the bank in Portugal here in Portugal. So this mortgage will not appear on a credit report back in the UK, Ireland or Germany or the US. So this is currently the case. So that gives client the flexibility if they have other plans with regard to lending in their home country. And the last reason why clients do borrow here is to reduce the foreign exchange risk exposure. What I mean with that is that clients that are from the UK or based in sterling or America, dollars, Switzerland, Swiss francs, because of especially since Brexit, we have seen because of the exchange rates that clients are not willing to exchange their sterling at current rates. So they will opt to take out a mortgage in euros against a euro asset so that they only have to convert the deposit amount, which would be much smaller than for the amount for the entire purchase. So this may be another reason why clients opt for a mortgage. So we do have many cash buyers as such that use the mortgage here more as an investment strategy. So it is not entirely because they need to borrow the money. It just fits in with their strategy with regards to their savings, portfolio assets that they may have. So this brings me to the different mortgage options that are available here in Portugal. There is to say, dealing with international clients daily, the market here has not as many different products to offer that you may know from your home country. So the mortgages here would typically be on a capital repayment basis, which means that every month you pay part of the capital plus the cost of the interest. So after the agreed term of the mortgage, the entire outstanding balance will be repaid in full. The mortgages are offered for an acquisition of a property in private names. At this moment, there is no bank that will offer mortgages in company names that are registered or incorporated outside of Portugal. So you may come across properties that are held in offshore companies. So this will be more applicable maybe to the Algarve in the Golden Triangle area, where some properties to this date are still in offshore companies. Sometimes we also have clients asking if, for example, a UK company could purchase the asset, but in those cases, the banks here will not be able to lend to a UK company, so it would have to be purchased in private names. All the banks offer variable rate mortgages, and there are also some fixed rate options available by some banks. The other type of mortgage, not an acquisition mortgage, would be a construction mortgage or a renovation loans. So these types of loans are more complex. They work on stage payments, the way the funds are released. So I will not go into those two types of loans, even though they are available. But if you are interested in buying a plot of land and building your own villa, I'll be more than happy to help you on an individual basis. So because this is not going to be covered in this presentation. The same applies to off-plan properties, for example, apartments that are still under construction and are due to be licensed maybe in a year's time when the construction is finished. So those are different types of loans that I can always give you advice by email, telephone separately. And all these banks will also make a difference between a resident and a non-resident. So this is based on tax residency. So this brings me to the options of the non-resident mortgage. This slide is very general because each bank has very different criteria and conditions. So I just tried to put some pointers because obviously clients always like to know, what do mortgage options look like. So here is just a general overview, basically a summary between all the banks, and it is as per today's lending criteria, which is of course always subject to change. So a non-resident would be an applicant that earns and declares their incomes outside of Portugal. So these mortgages are typically for a holiday home or a second home. The maximum loan to value is generally between 70 to 80%. So you would be required to have a personal deposit, so personal funds in the region of 20 to 30%, depending on the bank, plus the cost of the associated property taxes and fees. This is something that Keely mentioned in one of her presentation, which streamed on Wednesday earlier this week. The maximum loan term for non-residents is generally 30 years, with some banks slightly longer. The maximum age upon maturity at the end of the mortgage is 75, based on the eldest applicant. The mortgages are offered on a capital repayment basis. So currently, I know some banks still advertise interest only, but it is very, very difficult to get this approved. With regards to the borrowing cost, so on a variable rate basis, you would be looking at an interest rate margin of 1 to 1.5% above Euribor, depending on the bank, the loan amount, and the loan to value. So Euribor is it's the index rate that the bank will use, and then this will be increased by the margin. Euribor is the interbank lending rate. The equivalent in the UK would be LIBOR. So this is where the bank refinance on what levels the bank give each other money. So currently, in the low interest environment we are, currently Euribor is minus 0.5. So that would be increased by a margin of 1 to 1.5. So your net rate, your all-in rate, would range between 0.5 and 1%. So this is on a variable rate. And fixed rate mortgages are available for different terms, 5, 10, up to 30 years with some of the banks. But those rates would be higher because they will be based on the swap rates, which are expected future interest rate levels. The early repayment, it's also a consideration when looking at mortgage options. So if you can repay the mortgage in part or in full at any time during the loan term. The early repayment penalties are set by the Bank of Portugal, so they apply to all the banks. They're the same with all the banks. So it'd be 0.5%. If it's during a variable rate. So for every 10,000 euros that you repay early, the penalty would be 50 euros. If you opt for a fixed rate mortgage, so let's say you opt for a 15-year fixed rate, during the first 15 years, the penalty would be 2%. That means 200 euros for every 10,000 euros you repay early. So this is a consideration. We have many clients that are expecting future cash flow to come in by maturing endowment policy or investment products, and they are looking to reduce the outstanding debt once they receive those funds. So this is also something to consider. And for non-resident mortgages, because that would be typically for a holiday home, we generally tend to work with banks that do not require mandatory life insurance cover, and also the cross-selling is at a minimum. I will touch on the cross-selling on the resident product because it is more applicable to those. So resident mortgages, they are for a primary residence. Now, you see here the last point. I'll just explain who would be eligible for a resident mortgage, because we have, especially now, we have many clients that are looking to move to Portugal, and they would always want a resident mortgage because it offers a higher loan to value. So the banks differentiate between non-residents and residents on a tax status basis. So a Portuguese tax resident, somebody that has either the NHR status approved, the non-habitable tax residency status approved, or somebody that works here would qualify for a resident mortgage because they can prove that they are paying their taxes here, even though the incomes may still be generated abroad, so for example, through the NHR status. Okay. Some banks also offer this type of product for Portuguese nationals that are living abroad. So for a resident mortgage, typically the loan to value, it is higher than on a non-resident basis, so it'd be 85 to 90%, subject to approval and depending on the bank. The maximum loan term is also longer, it's 40 to 50 years, up to the age of 75, which is equal to the non-resident product. It's also on a capital repayment basis, and the interest rates are very similar. So it's 1 to 1.75% above Euribor. Just to remind you, Euribor is currently minus 0.5, so the all-in rate would be 0.5 to about 1.25%. So you see the higher end, 1.75%, is higher than on a non-resident basis, but this is because with this product, you could potentially borrow up to 90%. So the risk for the bank is higher with a higher loan to value, and this is reflected in a higher interest rate margin. Fixed rates they're also available. The early repayment penalty is the same, 0.5% variable and 2% during a fixed rate period. This is also set by the Bank of Portugal and applicable to all the banks. Resident mortgages, because those people generally live here and need more different products. So the banks do apply cross-selling in order to achieve certain interest rate margins. So life insurance would typically be mandatory with the banks, plus other cross-selling like credit cards, maybe a savings plan or health insurance and things like that. So this is different cross-selling options you can choose, and that will then be linked to the interest rate margin that you can achieve with your mortgage. So again, this is just an indication as it stands today, subject to change whenever the banks are reviewing these conditions. Okay, so that brings me to the approval criteria. I will keep it fairly general because each bank applies different criteria, so it's very difficult to generalize how each bank will look at your documentation. So all the banks will require proof of income and proof of existing liabilities, because in Portugal, it is always based on documented income and documented liabilities that will then, so based on these factors, the affordability will be calculated, which the main criteria is the debt to income ratio. So proof of income would be your latest tax return that may confirm salary, pension income, rental income. So all these different types of incomes will be considered for these calculations. And all clients will be required to provide a credit report from their home country to prove their existing liabilities. As I said, each case is different, each bank has different criteria. So it is our job during the pre-analysis to see if these approval criteria can be met with an application, and also with which bank potentially an application would be approved, because there are definitely differences. So just going through the mortgage process. Typically, the mortgage process would take between 4 to 6 weeks, and it also depends on your expected timelines. Obviously, it can be concluded at a much later date if the vendor and the buyers agree to do so. So the first step for all our clients is always to complete the mortgage inquiry form, which is available on our website. I will give you the details shortly. So the data on the inquiry form will allow us to we call it a pre-qualification. It's basically, it gives you an indication if the approval criteria for your intended mortgage application are in line with the bank's lending criteria. So in step 2, you will see we will analyze the data and provide you with a mortgage proposal. The mortgage proposal, it is an indication of what may be doable, what's feasible, but it is not a formal mortgage offer from a. It's always just an indication, subject to proof of income, etc., and the bank's analysis. The proposal document, we also detail, we always give like a little write-up how the bank's process work, because each bank is a little bit different. And we also calculate the property taxes and fees on there, which helps our clients for their budget for the purchase, because those funds will always have to be paid from personal savings. So it is always good for budgeting purposes, so that clients are not suddenly short of funds when it comes to signing the final deed. Should you then wish to proceed with a formal application, we'll send you the list of the documents that the bank requires. Again, each one has a little bit different documents that they need. And then we will submit the application for formal analysis to the bank that you choose based on the proposal document. We personally submit the application for approval, and we have selected account officers with each bank that have a good track record with resident and also non-resident clients, because we do deal with a lot of non-residents from all different countries, Poland, the Middle East. So obviously the documentation is very different for each of those jurisdictions. So the mortgage approval, the analysis by the bank will take between 5 to 7 working days generally. And then if the mortgage is approved, that will be on a financial basis subject to bank valuation. At that point, usually the bank account is opened. At this moment, due to the pandemic and all the travel restrictions that are in place, the accounts can be opened remotely. So previously, clients would have had to come here to personally present themselves to the bank. And the next step in the process would then be for the bank valuation to be carried out on the property by an independent engineer that is selected by the bank. The valuations, a lot of clients usually ask if the valuation differs very much from the purchase price. I can say that valuations are generally around the purchase price. Evaluators that are sent out by the banks will value the property based on the registered square meterage area as per the legal documents of the property and as per the usage that is registered on those documents. So it is not a structural survey. You as a buyer would have to request, you would have to organize that separately if you are interested in a survey, depending on the property and its age, etc. So at this point, once we have the valuation report back, the bank can confirm the final loan amount, because the initial approval, going back to step 5, would be just on a financial basis, subject to valuation. So at this point, the bank can confirm the final mortgage offer, and you will then receive a copy of the contract, which is the mortgage offer letter from the bank outlining the amount and the approved conditions. So typically, clients would either sign the promissory contract once they have either A, the financial approval subject to valuation, or they would wait until the valuation is completed on the property and sign the promissory contract at this stage. From then on, it goes very quickly. The banks, we will obviously liaise with the bank and your lawyer, but they will communicate with each other to arrange a date for the final deed. And then the final deed will be signed. There is to note that in Portugal, all mortgages are notarized. So it is a separate deed, which is signed in conjunction and at the same time as the purchase deed of the property. So this is a little bit different here than it would probably be in your home country. And then you are the owner of your dream home in Portugal. This brings me to the end of my presentation. You can find many more details on our website. And there are also testimonials from our clients over the many years, which you can read up on. And if you have any questions, you can send us an email. There's also, sorry, my screen has now gone. So yeah, so you can send us an email or contact us through the website. And I'm more than happy to answer any questions that you may have.
Yes, thank you, Claudia, for your presentation. Does anyone has questions for Claudia, our guest, regarding this subject? Nobody ever has questions.
And then I can't come off mute. I've got one for Claudia, actually, which I think would be interesting to know. And I think Greg may have asked me this on Wednesday. But in terms of approval rates right now, what are you seeing with the banks? Are they approving a lot of these mortgages, or is there a lot of challenges being faced for people to get their approvals through?
Okay, at this, and yes, we do get this question asked a lot of times, because obviously we're all living through troubling times and there's a lot of uncertainty. The banks have not yet altered their lending criteria. We are getting approvals through. There has been no reduction, for example, in loan to values, etc. So no, we have not seen any difference as of yet. That is, yeah, we have no indication also that it would change, but obviously nobody can see into the future. So, but as for now, lending is definitely available.
I have a question for you. You can't see me, but I have a question for you. How would you base your decision on having a fixed rate or variable rate? Is there a way of choosing, or it's just personal?
Okay. Very often, it is more in the mentality of the people, I find, how they choose the interest rate structure. I deal a lot with German clients, obviously because I speak German, so I deal with a lot of German clients, Swiss clients, also the Nordic countries. It is more in their mentality to potentially opt for a fixed rate, because they like to know how much they will pay each month for the next 15 or 20 years. Whereas other countries, for example, the UK, very seldom a client would opt for a fixed rate, because it is, yeah, they're just very much used to variable rates. Another consideration is the early repayment penalty. So if somebody is looking to purchase a property with a medium to a long-term investment horizon, then obviously the early repayment penalty does not really come into effect. But if somebody is just trying to buy maybe an investment property for rental purposes and wants to take a view in 3 to 5 years where the market is, if the investment has produced the expected incomes, or maybe then sell the property. So then the early repayment penalty should also be considered, because it is higher. It is 2% for the repayments during a fixed rate term.
Thank you.
I hope I understand.
No, it was great. That's what it's people, you hear all these things, but it's nice to see the thought process and the reasons, because not everyone explains. They exist, but no one knows exactly why or what's the difference. So it's very helpful what you've just explained. Thank you so much.
Well.
Anyone else would like to question Claudia? Okay, I must tell you that if you want to assist again this webinar and the other two we made during this week, you can go to our YouTube channel. Claudia, do you want to say anything else before we end this webinar?
No, I just wish to thank the audience for listening to me this afternoon. If you have any questions, I'll be more than happy to answer it. We're available by email, phone, WhatsApp, whatever it is nowadays. So thank you very much. And thank you very much, Sarah.
Thank you for accepting our invitation.
You're very welcome. It was a pleasure.
Okay. I think we have some messages, but it's not about questions, I think. No, everybody's thanking you, Claudia.
No, it was a pleasure. I wish you all a very good weekend.
You too. Thank you so much for attending our webinar cycle. I wish you all a good weekend, and hopefully one day we will meet again in another webinar. We never know. Thank you very much.